Yo, what's up, Stock Twits crew? Good morning and happy Thursday. We're back with another episode, and markets are looking interesting after all the earnings last night. And FOMC was a crazy day, so definitely want to get into a good conversation this morning and kind of recap what happened from yesterday. But Shy, crazy day. You kind of called it though, honestly. Like not as crazy as I thought it would be. Definitely. I mean, in terms of what we usually see with an FOMC, a nothing burger. In my opinion, there was still a decent move, but I mean, pretty mediocre if you ask me. So, great call there.
Appreciate. I mean, that's the benefit of doing this 24/7 essentially nowadays,
Yeah.
where you get a good pulse of what's going to occur in the market. Yeah, I mean, the Fed is taking a back seat, to be honest, right now, especially after the deep seek news. Like, it's all big tech and AI semis. Like, that's where the pulse is right now in the market, and it's earnings season. Like, the Fed was being priced in as 99.5% likelihood is going to hold rates. We knew that there was going to be somewhat of like language, dovish language in the press conference to offset the pausing the rates. Like, it's a delicate balance, and Powell did a great job, to be honest. Like, he kind of saved the market a bit, and I think right now we're just in pause mode and just focusing on earnings. So that's what you want to see. Don't love that the interest rates are going to be higher for longer. I think it's a coin flip on a June cut, and we're just waiting to see data every single month. The labor market just showing a lot of strength. So until that weakens, I think we know what the Fed's going to do.
Yeah, 100%. Well, let's recap with the daily rip and get ready for the day. Real quick though, shout out to the spaces we did yesterday too with Wolf and the whole entire crew. It was, I think, the biggest space they did ever. Over 100,000 people joined. So shout out to that. That was amazing. Great conversation. We had a ton of people on. Kathy Wood came on. It was wild. So shout out to that. If you were on the spaces, we appreciate you. Here's the heat map from yesterday. So pretty mixed up. Nvidia, taking the hit down 4% there. AMD though up 2.84%. So interesting seeing that. Microsoft taking some red and looking more red this morning with the earnings there, which we'll get into, I'm sure. But anything stand out to you, Shy, from here?
It's loading a bit now, but I do think for me, what stand out from yesterday was obviously some profit taking in software names. I think there's maybe some squeamishness on the big earnings afternoon. You saw a lot of big tech repositioning that was occurring. I think Nvidia is an interesting trade for me right now because remember that level I called out before, the 200-day moving average or the 40-week SMA? That's at 117. It bounced perfectly off that for the first time in 2 years. It tested it, bounced perfectly, went up 10%. So I'm going to be potentially looking into a trade for Nvidia today. And I know a lot. We got some CapEx commentary from Microsoft and Meta yesterday. I've got to say I'm slightly bearish on semiconductor names, especially after the CapEx commentary. So I wouldn't be surprised if we see more red in big tech, um, especially because the theory is if semiconductors are going to start pulling back due to the CapEx peak, I think it's going to highlight the overspending nature of Meta and Microsoft and CapEx, and that's going to penalize them, especially when you saw like they're spending recklessly and the risk of overspending was far greater than the risk of underspending. So I think Nvidia is an interesting one. I think they also did from Trump doing something with the tariffs, and I think that is been going to be a headwind for the first 100 days of Trump's presidency. Like, semis are going to be somewhat of an overhang. That narrative that any kind of tariffs for China, it's going to be the ankle weights for any kind of bounce back rally you see in that name. And I just think there's so much noise now associated with semis. It's almost like a why bother, but Nvidia is like excluded from that because of CUDA. But that's why I'm watching. But yeah, it was a not that great of a day for big tech.
Yeah,
I do think
100%.
financials caught a bit though because of what Trump was tweeting yesterday.
Yeah,
But
yeah.
yeah,
Good stuff. Trump turns up the heat on the Fed policy. The Federal Open Market Committee left rates unchanged as expected, ending its streak of the 3 straight cuts. Its statement was largely the same as December's, though it adjusted the language to indicate that the labor market remains solid and inflation remains somewhat elevated. In Jerome Powell's press conference, he said that the labor market has not been a significant source of inflationary pressure, and he indicated the committee would need to see real progress on inflation or some weakness in the labor market before we consider making adjustments. The labor market has stayed strong, and inflation stubbornly hangs over above its 2% target. So there's not much for the Fed to do here. The market has seemingly come to terms with the Fed's projections from last month, which indicated they see just 2 rate cuts during 2025 and another in 2026, or another 2 in 2026. So, yeah, interesting. I agree, though. You were saying earlier, like, I mean, he always does a good job. I think, especially yesterday, because, I mean, the first question Jerome was asked was obviously about presidency with Trump, and
Wow.
it was so funny to, like, you could see it in his face when he got asked that. He's just like, really? Like, the first question? Really? Like, I could just tell. But he handled it very well. He handled everything great, as he usually does. So, but something I noticed too is, like, some of the reporters asking questions, you really gotta ask direct questions, because if you don't, I mean, we know Jerome, he's gonna beat around the bush, right? Like, you gotta be direct. So some of these questions, I was like, okay, well, he's just gonna babble now and beat around the bush. But no, great meeting. It was fun to watch. But moving on here. What do we got? As for Trump, Powell said he has no contact since the president. We were just talking about that. That was the first question asked. And so there's no contact between the two. And so the president, yeah, just hours after the press conference ended, the president took to Truth Social to slam Jerome Powell and the central bank, saying they failed to stop the problem they created with inflation and have done a terrible job on bank regulation. I didn't even know that happened. I did not see that quite yet. So that's the first of me hearing that. Wild. I expect nothing less, to be honest. This quote sums it up. If the Fed had spent less time on DEI, gender ideology, green energy, and fake climate change, inflation would never have been a problem. Trump wrote, instead, we suffered from the worst inflation in the history of our country. Clearly, President Trump's battle with the Fed and its independent stance is just beginning, so the FOMC committee and the markets will have yet another uncertain variable to deal with as they navigate the current policy environment. Shy, crazy stuff from our new president, huh? And what do you think about that? Just
I
badgering Jerome Powell, bro. Oh my gosh, I think this is hilarious.
think it
Oh
was
gosh.
wild. He was tweeting as Powell was going to do his
Yeah,
press conference. Like, that's just wild to do. But yeah, he's a reality TV star, so he loves the spotlight.
absolutely. No, that was hilarious. Recapping today's Mag 7 results, Tesla shares dipped, then ripped after reporting adjusted earnings and revenue that missed estimates. Total revenue rose just 2% year over year, but automotive revenues sank 8% year over year to 19.8 billion, with 692 million coming from regulatory credits. Lower average selling prices across its product lines drove the decline, with its operating margin shrinking from 8.2% last year to 6.2%. However, total deliveries also posted their first annual decline in high financing costs and increased competition. Tesla did not provide specific guidance for 2025, but said it expects the vehicle business to return to growth. Still, the company continues to encourage investors to look beyond the autos and ahead to its future of autonomy and robotics. It will need to unlock an unsupervised FSD option and launch its driverless ride hailing business sometime this year to assure investors that its vision is feasible. I am stoked for that. We saw, like, a few days ago, they post that, unsupervised driving is really coming out. I am very happy to see all of this. But obviously this earnings was like nothing to go home about. We got a nice move up. But I mean, nothing extremely bad, nothing extremely good from what I got on the AI summary. I was just going through it this morning. Nothing really that's like, oh my gosh, this is amazing, and nothing that I see that's like, this is extremely bearish for me. So I know StockTwit sentiment is extremely bearish, which I find interesting. And with all the movement we've gotten, the Trump trade, I actually expected some down movement on this earnings, so little surprise there. Don't know how we're doing in pre-market. We'll take a look. But Shy, any big notes you want to take from the Tesla earnings?
Yeah, I mean, so I think we can all agree their premium valuation has never been about selling cars. It's about owning the future of AI driven mobility through autonomy, aka FSD. So I do think like their earnings reports are never going to be about the numbers. It's always going to be about the narrative. And I think Elon's on the conference call was clearly super excited about the future of robotics and autonomy in Tesla. And that is and this is a very narrative driven stock. And that's why you're seeing it up 4% pre-market. I think it's up 4% pre-market. Yeah, up 4% pre-market when essentially they missed on the top and bottom line.
Mm-hmm.
So I do think that fixating on these metrics really does miss the bigger picture. Like Tesla is transitioning from an automaker to an AI-driven robotics powerhouse, and you heard from Jensen a couple weeks ago. Physical AI is the next derivative of AI, and that's essentially robotics. And that TAM, in my opinion, is the greatest TAM in the history of like mankind potentially for tech. Like it's revolutionary if there's gonna be a company that solves it first. And I do think that's gonna be Tesla, and Tesla's at the forefront of that. Like as AI moves from digital to physical, Tesla is leading that movement. So as autonomy takes center stage going forward, like I do think that you heard from the conference call, like management's a lot more bullish than ever on FSD. They reaffirmed their commitment to launching unsupervised FSD in Austin by June, and they also expect 26% like year-over-year delivery growth in 2025. So I think that like this reinforces like their strategy to scale autonomous fleets. The EV business looks like it's recovering. A lot of the weakness that you saw in their gross margins, I think they met estimates were 19%. They came out at 16%. That wasn't due to demand. It was purely due to financing incentives and aggressive pricing strategies. Because again, they're sacrificing their EVs business in order to accelerate their autonomy vision. That's what I want to see in Tesla. Like I'm not investing in Tesla for an EV car maker. Like that business economics of EV car makers are disgusting. But autonomy and AI, like that's in 70+% software margins. Where the business econ for EV cars are like low to mid teens. Like it's drastically different. You can't compare the two. So I do think that I'm okay with it. I know a lot of people aren't because they're fundamentally driven. I'm not touching the stock at $400, even though I'm super bullish in the name. It's because it's all about timing. When did you get involved in Tesla? What's your exposure, etc. So like, Microsoft is another one I can go over as well. So Microsoft is, I don't know. I'm conflicted on Microsoft.
Dead.
It's not dead, but
Just
it's
joking.
not great. It's like all right, so it's all about the reason they're suffering this morning is all about Azure. Like their core business, Azure is falling short of expectations, and that's why it's down 4% pre-market. And their cloud guidance was a lot weaker than expected. And this is a combination with their CapEx rising. So now it just makes a very cloudy pathway going forward. I do think that this stock is somewhat in range bound in the near term until like their execution improves or cloud growth reaccelerates. But either way, like Microsoft is. By the way, when I'm bearish on Microsoft, I'm bearish just purely on their valuation. They still remain a dominant AI player in both applications and infrastructure. Their cloud and AI strategy is clearly working, but the is a key question that does remain. Like, when will the AI-driven revenue fully offset the slowdown in Azure workloads? And I think I myself need some more clarity on their AI monetization strategy and also like their CapEx payback periods because they're trading at like I think it's over 30 times forward earnings. Like I think maybe 32. So like they're priced for perfection essentially. And yesterday was not perfect. They had weaker than expected cloud guidance, and when you're priced for perfection and your core business like Azure is kind of falling short, you're going to get penalized. So I don't think this is a name that's going to catch a bid at all until we get some more color in the next earnings report of signs of cloud reacceleration or their execution improves. Either way, this is a hold. Sit on the sidelines. Like I wouldn't touch it.
Yeah, I'm with you. Looks like the estimates came in below that and 19% We can move on to Meta here. Meta hit a new all-time high after its earnings per share and revenue both topped estimates. CEO Mark Zuckerberg expects 2025 to redefine the company's relationships with governments. Fourth quarter revenues rose 21% year over year, while net income rose 49%. And daily active users rose about 2% quarter over quarter to 3.35 billion, topping analyst estimates of 3.32 billion. Meta's AI chatbot topped 700 million monthly active users, up from 600 million in December. It expects that number to scale to more than 1 billion this year. As for DeepSeek, Zuckerberg said it validates Meta's commitment to an open source approach to AI. He said there's going to be an open source standard globally for our own advantage. It's important that it's an American standard, he added. Meta reiterated its $60 to $65 billion CapEx forecast for 2025, with its investments in AI infrastructure anticipated to be a strategic long-term advantage. While it did not provide a revenue outlook for 2025, financial chief Susan Lee said investments in the core business will give us an opportunity to continue delivering strong revenue growth throughout 2025. Meta shares rose as much as 5% after hours, but are now flat. They did come in pretty good, and I think we're just chilling pretty flat where we are, or where we were at the close of the after hours last night. So looking interesting. StockTwits sentiment is extremely bullish. So complete opposite of Tesla there. Very interesting. Meta, Shy. I mean, what a name this has been over this whole past year, and then even continuing into this year. Looking really good, hitting all-time highs here. Any more thoughts on this?
I think the biggest jaw-dropping metric from Meta was clearly their operating margins went up to 48%. That's just like so freaking nuts. And I think that's something that I still can't get over. Like, they're printing cash.
Yeah.
And they're one of those companies that are just gonna have this massive moats in digital infrastructure that's not gonna be going away anytime soon. I do think if I had to say some kind of negative from yesterday's print, I think they're going to be a bit behind on their CapEx reduction. I think you heard commentary a bit from like Microsoft's, like clearly their CapEx is peaking because it's on their Q3 and Q4 guide compared to Q2. I think Meta committed to 65 bill on infrastructure. I do think also like their total expenses for this upcoming year is supposed to be like 180 billion dollars. That's more than their entire 2024 revenue. So like think about that. So they're pouring so much capital in AI data centers and compute power, and I think you can see that as a good thing because they're committing to this arm race, and Zuck is obviously all in. But also like it's gonna be margin compression, but we're not seeing that yet because like clearly 48% operating margin is absolutely wild to see, and I think their AI model strategy was clearly what's going to end up being a reality, which is Llama's always been open source. That was like their differentiator between like what Microsoft and Google was doing. They from the get go was like, we're going to be open source. After DeepSeek's playbook reveal, that is going to be inevitable. So I think that's going to benefit Meta a lot. We'll see what Microsoft and Google have to do to adjust to that new world of LLMs, the race to the bottom, but I think Meta's in a great spot. It's just fairly priced, and there's going to be a CapEx like headwind going forward that's going to compress their margins a bit. And I think it's fairly valued. So there's not much to be squeezed here. Probably goes to the cycle level of 1,000. Where are they right now?
And go sideways for a few months.
Yeah, they'll go sideways for a few months until they report another dominant earnings, and yeah, it's a great stock, beach stock. Like, don't worry about the stock. Absolutely. But also, if you don't own it, I wouldn't participate now.
No, I'm with you there. Moving on. Today's top things to watch out for: economic data. We had European central bank rate decision coming at 8:15 Eastern. GDP came out, I believe. Let's see. Lower than expected on the quarter over quarter in the price index, so something to watch out for there. What else we got? Initial and continuing jobless claims at 8:30 Eastern. European Central Bank press conference at 8:45. Pending home sales at 10 o'clock Eastern, and then we got The pre-market earnings going off right now are Nokia, Southwest Airlines, Caterpillar, MasterCard, Altria Group, Sirius XM, United Parcel Service, Comcast, Blackstone, Mobileye, and the Dow. And then we got Apple tonight, Intel, Visa, U.S. Steel, Lasian, what else we got? KLA Corp, Weyerhaeuser. I think I said that right. Decker's Outdoor. And reminder, you guys can listen to all these on the Stock Twits platform, so make sure you guys are checking that out. But still lots to go over for the evening tonight. So earnings are not done. We had a big earnings day yesterday, but it's not over. And we got more into the next week, I believe, as well. It's earnings season is here. So yeah, we got plenty of names next week as well. It's gonna be fun, and continued data tomorrow. We should have PCE tomorrow and some speakers. So plenty to watch out for going into the end of the week. Anything you're really watching on the earnings side of things, Shay?
Yeah, I mean Apple clearly.
Yeah.
So I made a post about this morning on Apple, my preview on their earnings. Again, the Q1 earnings that's going to be revealed today. It's not going to be about what Apple has done. It will be about what's next. Like, can Apple Intelligence evolve into some kind of mode for them, or is it just another incremental software updates? Like, there clearly is an absence of a super cycle, and that narrative really has shifted in January. You can see in their stock performance. So will management acknowledge the lack of a super cycle, and will they just maneuver that narrative to shift towards services and wearables, where that's like been their bread and butter and what's working? So I do think the stock's premium valuation will only hold up if Apple Intelligence is going to pick back up. Like, I think the last time Apple was in this position, they obviously proved the dollar's wrong. iPhone transformed the company from a consumer electronics company into a global powerhouse. But this time, it's like really not about a single device. So it's like about proving if Apple can lead the next era of compute through Apple Intelligence. Like, as AI moves from the cloud to consumer devices, like Apple's perfectly aligned to capitalize on that. So I do think today's earnings call will give us somewhat of a first look on if this is going to be Apple's next iPhone moment, or is just another overhyped feature that will see no real impacts. It's going to be entertaining.
Absolutely. What do we got next? The Mag 7 continues to dominate. There's that the purple line is that Round Hill Mag 7 ETF. So clearly dominating against the SPY and NASDAQ there. So 128% versus 67, 46%, right? Which is still phenomenal. But just to see the Mag 7 just outperforming like that, love to see it. I'm interested, though, to see, I mean, obviously over the next, on a longer time frame, right, the next 2-3 years, how this trades relative to the normal, S&P and QQQ and everything. So any thoughts from the Shy? It's a nice chart.
I mean, I think there's going to be a repositioning that's going to happen in this year. I don't think Max 7 is where you want to be, except for Amazon and Nvidia. I think the rest, what DeepSeek revealed is going to have impacts on Max 7 names. It will. And I think Google is going to be the most severely punished among the group. And I think that the reason for that, I should probably back up what I'm going to say on why Google is going to suffer the most. I do think, like, AI commoditization, which is essentially what DeepSeek paper revealed, is going to pressure Google's pricing power, and it's going to increase the risk of like AI agents or alternative AI-driven search models being introduced into the market that might disrupt their core ad business. And I do think while like Gemini can integrate these new advancements for that DeepSeek had revealed, I do think there's somewhat of a threat to search that remains a long-term overhang. It's been an overhang. It's just going to continue to accelerate after what DeepSeek revealed. And like I mentioned, I think lower AI infrastructure costs is going to benefit Google Cloud. But I think declining hardware requirements will weaken Google's TPU advantage. So I think there's just so much. It's a battleground stock, in my opinion, now. And I think that's too much of a headache. I think Meta's going to thrive in the future. I just think they're fairly priced. I think Microsoft's, like, the accelerating shift towards open source AI models is going to somewhat challenge Microsoft's reliance on open AI, and especially the exclusivity of having an LLM like OpenAI. So that's going to be interesting to watch. I think Amazon is gonna benefit from the open source models. That's gonna drive greater cloud consumption through AWS, and also while their GPU rentals might take a hit, I do think they're gonna see some increased demand on processing and Gen AI applications, way greater than the GPU rentals. And Apple, you guys heard me on consumer AI, my take on that, and I think Tesla again, they're going to lead real world AI through autonomy, and I think they're going to be just fine. And Nvidia's CUDA platform cemented themselves into permanence for the new digital economy in the post AI world. So they'll be fine. They'll make more than make up for the GPU hardware hits. That's going to happen in the next couple of years. So yeah, that's my quick take on the Max 7 names.
Yeah, good stuff. United Airlines bouncing off support continues to ride that rising trend line from late August 2023. Pulled back to the trend as well as price level support in the short term, and so far is attempting to bounce. Lows from Monday would offer a good stop loss for a trade setup. So, you're seeing that trend line continue to higher lows, higher highs. You're in a bit of consolidation right now, just above that $100. But I think as long as that $100 is holding the support, and you're continuing making higher lows, this looks pretty decent to continue higher. So, looking solid there. Again, like until you get a real break of structure to the downside, I think this looks solid. Any thoughts on the airline, Shay? We've been getting some airline talk going on Twitter.
Yeah, some unfortunate news that dropped yesterday.
Yeah.
No, I don't like the business economics of airline stocks. So like I just don't see why you would own it. Really, it's not a great business model.
It's a tough business, that's for sure. Carvana with more upside. Gosh, what a name. If you guys have been following me for a while, I was trying to short this at $70, and I wish I changed my thesis because Carvana really turned around and has done well. And it looks like it might want to continue to go higher here. Holding the structure, I don't know. I personally would like to see a little more sideways ranging price action. I feel like we haven't gotten enough of that. This has been pretty steady on the uptrend, but also not like screaming to the upside on like straight up, right? It's kind of gone up and to the right and more on a consecutive growth there. So I wouldn't be surprised if we start to consolidate back and forth here. We're getting some big levels, trying to hold that 200, getting up into that 300. So interesting name here. I definitely think, bit of a turnaround from, about a year ago or so. So doing very well. Any thoughts on Carvana, Shay?
Yeah, so I think something's weird's happening in Carvana's balance sheets, because when I looked at it a year or two ago, I was like, this, again, business economics is not going to work for Carvana. I don't know how they're going to trend towards like mid-teen, high-teen profitability margins. Clearly I was wrong, but also like I still have a hard time believing that Carvana's business model is this efficient and this like explosive, like this much of a margin expansion opportunity on what I believe is like inflation is really like high and sticky. Like the margins can't be this juicy, like especially in consumer buying behavior. Like it just doesn't add up for some reason. I think there was a short report that got revealed on Carvana recently as well, like a month ago, that highlighted my concern. So this is a name I was clearly wrong on. I thought it was going to be like a dud 2 years ago.
Me too, bro. I hated this name. Like literally, I would talk so much trash on Carvana. But yeah, you can't argue with what the stock's doing at the moment. So doing very well. What else we got on the charts? Bitcoin, the cup and handle for Bitcoin. So let me take a look at my chart as well. Bitcoin has just kind of been in that consolidation still. Really not doing a whole lot, but nice to see us holding over that 100,000. I can't really say strength. I don't want to say strength yet because I really don't see that. But just sideways price action, right? We're ranging again after those massive moves we made up through 100K. I just look back from that consolidation that we came from, right? I remember sitting in that consolidation from March to, September there. And throughout that whole span of time, everybody's freaking out. And, if you're just looking at Bitcoin on a weekly time frame there, we were just consolidating sideways after those impulsive moves we made up. And right now, I think we're doing the exact same thing. So I think it could continue to be maybe quiet here unless we really get momentum over these highs. But if we are going to continue to be quiet, right, it's just going to range back and forth between this 90,000 and 106K basically, and that's when if every time we're going to those lows and we're getting bought up below those lows that we break, I'm continuing to see buyer step in. If we want to go and fill price back down to those previous highs that we were consolidating at, that we came from, that 72,000, that could be super interesting. Wouldn't be great for Bitcoin in my opinion, but yeah, I like the consolidation we were in. It's just boring. You got to sit through it, right? Any thoughts, Shy, on Bitcoin, the crypto markets?
I think crypto is going to have their euphoric year this year, so I
It's
think it's
time.
going to go explosive. But the market just opened up, so I want to see how everyone's reacting.
Sir.
Tesla's up 6%. This is wild.
Very nice. Very nice. I'm not feeling extremely bullish quite yet. I'm more on the other side at the moment, but not making any moves yet. Let's see how Nvidia is. Pretty quiet. There's that bell. Coinbase getting the gap up. Yeah, Microsoft not looking good, opening at 417 there. Apple opening up strong. VIX is sitting just under that 16 bucks, so keep that in mind for how you're sizing any of your positions. Not a whole lot of volatility, but not completely drained out either. NQ's pretty choppy in this pre-market here, so I'm waiting for clarity. I need to see something clear before I do anything personally. Feel free to drop some tickers in the chat, though. We'll go over some real quick if you guys want us to look at anything. Google getting a nice pop there, getting into that 200 bucks. Watch that. It's a big psychological level. What else we got? Meta opened up. Holding. It didn't. It kind of gave back a decent amount of the move, but still holding up here into the open so far. And Tesla looking for those new highs. Let's see if we can get it. NQ's looking poppy. See if this wants to make a new high. I again need clarity, man. Boring for me. What do we got? What do we got in the chat? Chat wants sound and NBIS. All right, let's start with sound. Or sound. SoundHound. Haven't looked at this name in a minute. Getting a nice pop into the open here, but let's take a look at that daily chart and see what's really happening. Yeah, so for me, we kind of started consolidating after those big moves up. We came down, took those lows December 11th. We're holding those lows as of now. Kind of quiet the past few days, to be honest, just consolidating back and forth. But I think you got that gap above us. It's pretty small, but I do think we're holding previous day highs right now at the open. As long as you're holding these previous day highs and these range lows that we made on SoundHound, I think you have a good chance of maybe seeing that range high at 1765. So that would be kind of like first spot I'd be looking at, or $17 even. There's also a level there. If you're doing any day trades, and then further continuation, I'd be looking for that 1850, just level by level, basically on the daily. On a longer time frame, I guess I could. Yeah, we're kind of in this period where I don't know. We could definitely go sideways for a little bit. At the same time, if momentum does get pushing in here, and we do get over those highs I just mentioned at 1765, I'd love to see continued momentum into that 20 bucks. But 2285 is a big daily level I have. So don't really have any I don't know. I'm not super convinced on either direction on SoundHound or anything, but just throwing out levels out there that I think have importance. And again, right now, you're opening up above previous day levels. We back tested previous day high, and that's also Tuesday high, Monday low, all those levels bunched together. And we're holding that. So, price is telling us we want to at least be above that. And I think as long as you're above that for today, you got that move to, what is that? The first level will be 1530, 1540 there. So that's when that gap does start. Any thoughts on Sound, Shy?
I don't like their business.
No.
I don't like their business.
Not the model.
I think it's a dud. I think it's riding the AI wave a bit. I'm in the minority again. I could be wrong in this name, but I think SoundHound, I think C3AI, I think those two names specifically are just riding the AI wave. But in long term, I just don't see them not survive. Surviving is a harsh word. Thriving. I just don't see them thriving.
Yeah,
They might be here.
I get you. What else we got? We had NBIS.
I'm so annoyed. I bought TSLZ this morning, right at the pre-market. I mean, right at the open.
Mm-hmm.
It's an inverse ETF by Rex Shares. If you guys don't know, I do that rather than buy puts on Tesla. I just like Tesla feels like a little fadey a bit. It's a $3 stock. So I bought 100 shares. For some reason in my head I thought I bought 1,000 because I wanted a couple
Oh,
$1,000. It, it went up 4%. I was like, why am I only up $5? Oh my god! I only
you
freaking
didn't
put
buy enough.
200 shares. I didn't buy enough.
It's
So I'm
okay.
like,
It's
oh
okay.
god, I'm just selling it now.
Shake it off. It's okay.
But yeah,
All good. Taking a look at
Okay.
NBIS here. Pretty cheap. Um, this name is just really not done too well since what is that? Since November of that's 2021. Oof. Okay, yeah. So it's been a few years of not doing good on this name. So I can't think upside as of now, just because all you've seen is aggressive lower lows, aggressive lower highs being made. Now you are seeing a bit of a market structure shift on the daily now since 2024, from what I do see. But at the end of the day, it's not like momentum that I'd want to see. You're not breaking any previous significant highs. You're just making new higher highs within a bearish range for me, right? So higher highs, higher lows is great. At the end of the day, you're not making higher highs and higher lows over any significant previous highs. So it's not ideal for me for any upside. I'd have to wait on this, and this name also just trades weird from the way I'm looking at it on the chart. But yeah, interesting. I gotta think continued downside until I actually see some real momentum stepping in. VRT. Did I read that right in the chat? Yeah, VRT. Let me take a look at that. Vertiv Holdings. I'll also take a look at VST, which has been ripping. That just reminded me of it because they're super similar. Big gaps made on the daily for VRT to the downside and upside. So we have gaps below us that I definitely think we could fill potentially today, back down to that previous day high from yesterday. And then you have that big gap above us here. If you're looking to be bullish in this gap, right, and a lot of you probably know my gap rules already, but if you don't, I like to always target that first 50% retracement of the gap. So on this name, that would be 133.45. That's what I would look to trade to first. But, but before we even think about that, you got to get over these highs that we're not able to get over right now, which is 121.48, right? That's where this gap ends or starts if we're trading to the upside in it. So to even start, thinking about getting to that 50% retracement, we at least have to get over these highs, which right now, not looking very strong at. So we'll see what happens with that. VST. I just wanted to look at that because they're very.
So I think VRT, some commentary on that. I would.
Yeah,
stay
let me
away.
hear it.
I think CapEx peaked a bit, or the rapid growth of CapEx is going to peak. It's going to start just slightly. The growth year-over-year percentage. The dollar incrementally will keep going up, but I'm saying I think we reached that gold rush on AI and data center spend from big tech, and VRT is a low margin server rack company for cooling and managing data center infrastructure. So again, if there's gonna be less devices in these data centers because the growth is slightly lightening, VRT and like the SMCIs, like the TSSIs, like these names are going to kind of suffer, especially because it's a low margin business already. So if the top line growth starts slowing down, they're going to get penalized even more than the rest of the ecosystem. So I'd stay away from VRT, actually. I think they deserve to probably start either consolidating or maybe filling that gap, because I don't know how much pull forward demand in their revenue is being priced into the stock right now. And I feel like looking at this chart, I think it's being a lot of pull forward demands being priced in, that if that's not going to actually come to light anymore due to DeepSeek's playbook reveal, it's going to be a worry. This might be the top for VRT in the near term.
Uh-oh. Be careful.
Uh-oh.
What else we got? AMD, which was one of the semis that were green yesterday, unlike Nvidia from that heat map. AMD right now testing that gap we made from the weekend. So we're in that. Again, gap rules. What do I like to target the first time? That 50% retracement. That is going to be at 121.10 on AMD. So popping right now, we hit 120.43. So you're about 70 cents off from that first target. Obviously, if you get displacement over those, over that 121.10, and you flip that area to support, I definitely think you could get a gap fill here. So that's kind of what I'm looking at for the day. Maybe on a longer time frame, though. Look at a daily and just look at the lower highs and lower lows. It's simple, right? I mean, it's really tough to try and be buying this thing when there's no indication of it wanting to go to the upside, right? I know it can be enticing because it's like, oh, cheap prices, but for me, it's not amazing. The only thing I see that actually is kind of interesting that I'm keeping an eye on is we did break below those early December lows. I believe, yeah, those are December lows on AMD, and we're kind of sweeping those lows. Prices back above them. We're holding that. So that is interesting. That's a big area that we haven't tested since we made those lows. So I definitely think those are coming into play right now, and just noticed that. So maybe that's a little bit of a supportive thought for some upside, but not enough for me, right? I want to see some market structure actually forming, which would be higher highs, higher lows, a little bit of a base maybe, go sideways and consolidate for a bit. So on the longer time frame, obviously still cautious on AMD. Not a name I own anymore, but maybe start to see some upside if these buyers hold these December lows, and we can start displacing towards these range highs that we're at, that 125, 131, etc., all these previous daily highs. So something I'm looking for there. Any big thoughts on AMD? Shy, I know it's been the advanced money destroyer, basically, is what I've been calling it, but
Yeah, so
been rough.
AMD, I'm not touching until they improve their software component of their ecosystem. Like you can't just be a hardware company anymore. Like it just doesn't work in this environment we're entering. So AMD is obviously trying to sell their ecosystem vision. They did it by acquiring a server company like 6 to 12 months ago. That's the wrong way, in my opinion, to sell your ecosystem vision. Their open source component of their software in their ecosystem is kind of AMD's strategy. I don't think it's underwhelming. It really is. And I think you're seeing like CUDA's the reason Nvidia is succeeding so much right now. Like the hardware is great, obviously number one hardware, but like it's not drastically better than their competitors. It's their software. CUDA is like really the selling point. So AMD needs to solve that. But also I do think CPUs might have a renaissance. They really might. And that's something to monitor for AMD and Intel going forward. So maybe AMD's bid could be CPU related. I know they caught a bid yesterday or 2 days ago when all the other semis suffered. Like I do think that's because there is a CPU narrative that's coming to play now that maybe they'll capitalize on. But either way, like just look at that chart. Like this is clearly it's something's not working. I think it's their like they need to improve their software. Like they have to. Like that's what I would do if I was Lisa, the CEO. Like make acquisitions, do whatever you need to. Like that software component needs to improve, and right now it's just not doing it at all.
Yeah. What else we got? PLTR. Getting over that $80. A little choppy morning at the open, but getting some momentum now. Obviously, Palantir got a nice pullback. It did get bought up, and we're basically right back at the highs. You have seen some rejection from last Friday, which was right around that $82. So, got to watch out for that as we're coming right back into those levels. But primed to try for all-time highs again. We're right there. It's just a matter of if we keep seeing rejection like Friday at these every time we get to this 82, 83 area, it's not a good thing. So. But I'm not surprised you're seeing a little bit of hesitation right at these highs. They usually don't like to make it a super easy breakout. So, yeah, be watching for all-time highs. Dips were bought, so I do expect a new high on Palantir, but not a name I'm really trading very often. Any other thoughts, Shy, in that one, Mr. Palantir?
Valuation. Top three position for me, but I will say valuation has made me trim the stock significantly past couple weeks. It went from by significantly. It went from a number one 11% of my portfolio to now it's like number four 7%. Still significant. It just they have to prove they're going to be the operating system for AI going forward. Like they're the clear stage two AI winner. I just think that narrative is being priced into the stock already. So now they have to back up with fundamentals, and that's a tall order to ask. So like, can your revenue actually really accelerate to 40% when it's been traditionally 25 to 30%? And their white canvas approach for the commercial side of their business, like it does take time to scale up. It's not like immediate. So unless their government business is just like carrying them in the near term until their commercial side picks back, like gets to scale, which I think they will, but it won't be as quickly as people anticipate. Um, it might be in consolidation mode. Like I've been saying, like I think Palantir would be base ranging between $50 and $70 for maybe the rest of the year, and that's fine. It really is fine. And if you guys want your like AI exposure in your portfolio, like I really do think it's. I've been saying this a lot. Like I think it's really difficult to try to have that AI bucket and not include a Palantir or Tesla. Like you just have to because they will be the two clear stage two AI winners, and valuation is elevated on both names, but the potential is just sky high. So like if there's a pullback, like maybe it's a great position if you don't own any of those two names to like dip your toes in. But either way, I'm not doing anything with the stock really, adding wise.
Yeah, I get you. Someone said software getting bodied like D-Dog and MDB. What's MDB doing?
So I've been very vocal. I'm bearish on Datadog.
Are you?
I am a big bear on Datadog. Yeah. I think
I
AI
think you did
agents will
mention that.
absolutely yeah, I think AI agents will absolutely hurt their business going forward. And the reason for that is first off, their valuation is greater than Snowflake's for one. Snowflake has such a higher ceiling than what Datadog does in observability. Like it's drastically higher. Like Datadog might have a higher floor because they have a 70% market share in data center management, which is essentially what observability is, and make sure clients don't overspend on the cloud. That's what Datadog does. Snowflake is just a data platform for enterprise AI. Like they're gonna make their ceiling significantly higher, but they're being priced cheaper than Datadog. So I think that's valuation is definitely a concern for me for Datadog, and I do think in this agentic AI world, they're gonna benefit from like the sheer volume of data flowing through users and servers, and their consumption model will benefit drastically from that. But I do think that AI agents, like you can create an AI agent to make sure you don't overspend on the cloud. And I think that's like that something as simple as that. Like I do think that's going to be a major headwind on a Splunk, a Datadog, where like these are observability names, key names that really have been benefiting from just the growth in cloud. That their clients just like want to clearly just adopt like Datadog's platform to make sure they're not overspending. But I do think that the rise of AI applications should continue to demand for Datadog in the near term, like for next year. But looking ahead, like I don't know, like I do think as AI applications get more sophisticated, they might integrate observability directly into their own code through AI agents, and it reduces the need for a third-party platform like Datadog. So maybe I'm just being a pessimist in that, but I think it's I don't know. I think their ceiling just got way lower in my opinion, and it's also a very crowded field. Like Datadog's by far the best, but still crowded. I wouldn't touch. I really wouldn't. But it's tough. It's tough because right now, fundamentally, like you're seeing their margins and you're seeing their growth. Like I look like they're schmuck sticking my neck out. Like I think it's going to be complete opposite. But I just wouldn't be bullish in his name. That's just my 2 cents.
Yeah, I hear you. Well, I think that's gonna wrap it up for the morning, ladies and gents. Thanks for joining us as always. Shy, if you have any other thoughts or things you want to let them know the crew before we wrap up for the day, feel free. But if not, man,
Uh,
I think we're good to wrap it up.
yeah, I mean, we're in a good spot. I feel like the earnings were good enough yesterday to not like make those
Yeah,
sell
I mean,
off in the
not a
rally.
bad idea. I feel like to spend the rest of the week kind of digesting some of the earnings going through, and just
Hmm.
really getting ready for next week. So everybody trade safe. Have a great day. We'll see you guys. Well, myself and Wolf, we'll see you bright and early in the morning. Shy will see you next Monday. So we'll see everybody next week with me and Shy, and then me and Wolf will be on tomorrow morning, and we'll have some fun with everybody then. So appreciate the crew. Make sure you guys are liking and subscribing on the Stock Twits channel, and we'll see you guys early in the morning. Oh yeah.